trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
All right, folks, since the Dow's on fire, I thought we'd take a look at it. This is over the last couple of weeks. There was our low that we had here back on Friday. And then, of course, yesterday's low, you can see it pulled back right here. It looks like just a little bit more than the 382, probably 50%. Let's just double check here. Maybe not. Yeah, it is a little bit more than, it's in between. It's about 44%, 32. And then you can see here, we exploded here. We went sideways all this time early in the morning. And then when the market opened, away it went. And you can see here, we're going to be, we're way above. You can see we're way above the 786. I believe we're probably right at the ABCD apex, right about, we're not even, we're already even above that. So, we're still going higher. So there's no reason to think that it's not going to. But this is an explosive move to the upside, folks. What we should do is look at it on the short term, but you're not going to see any pullbacks here, folks. This is on its way. There it is on a 4-minute chart. Here's the open right here. You had one pullback here. It backed off about 12 minutes, okay? Now, if you were following a 382, which we like to do, there's your low of the morning. There's your early morning low. There's your 382 pullback right there. That was your last chance to get in. And then look what it's gone here. We've gone from 476. That's 1,500 Dow points, folks, with no risk at all. You just shut your eyes and buy. Look at headed for the sky. Anyway, that's what we've got going here. This market looks extremely bullish in just about every aspect of things that we're watching here this morning. Now, we do have one that is not acting that good. And I put this out as a sale early this morning before it hit there, and it's been here all day. This, if you like 382s, folks, this is your Treasury bond market, all right? Now, there's your high way back here on the 28th. There's your 382 right here. I have to redo this because it is changed just a tad because of the lower low. I want to get that in there. You'll see that we went up to it just a tiny bit above it right here. This was the number I was watching, was the 382 off of this higher high back here. But because of that lower low, I didn't get it done right. But anyway, this was your ABCD right here at 117.16. And it was also the 382 off of this high right here, as I recall, right on the money. And so that's why we were saying to be a seller here, 117.16. It backed off to 109. It hasn't done anything all day, folks. There's been quite a bit of activity around this level. But look, that's all it did. After we get there, we only backed off to 08. And so that's where we are. Just looking at this on a shorter time frame, you can see we also had an ABCD there at that point. We pointed that out in the other one. That was from yesterday to today. And you can see there's where you went right up to your number, 117.19. That's so far as the high. So it hasn't gone anywhere. Look at this. It's been here all this time. Has done very, very little. So that's where Stan Harley will be our guest today as we go through and look at this. Now, I have to share with you a couple of charts that I think that because we talk so much about these things, and when they do happen, I like to bring it to your attention because these things really do work, folks. And the more data that you get about how things work, it's really quite exciting. At least for me, looking at this, I can see this. I said, wow, we have to share this with the folks because it looks so very, very interesting. Now, let me get this chart up here. This is going to be an interesting one. Well, they're all interesting to me, but let's take a look at the cattle chart. I mean, that's a very heavily traded market. And yesterday it was limit bid, folks. It had a 10-cent move from low to high, and then it stopped. Let's get this up here. You're going to see where we are. Okay, now here's where we were. I just want to show you this, okay, because this is what we talked about yesterday. Look, it was limit bid right here. See how it went lower? That was a 10-cent move in cattle. That's all you can get, limit bid. And then this morning, what it did was it opened exactly at the 382 of the high that we made on the contract high. Exactly. What did it do? It dropped 3 cents. That's a $1,200 move. Now it's come back, but that's exactly what it did. Now, I haven't even looked at this morning, but I don't know. That's not a 382. I can tell you that right now. Not too far off, but let's see how close it is. Yeah, it's too far off, but that's exactly what that is. That's why these numbers are so important. These people on Wall Street, they know what these numbers are. So we got to pay close attention to them as we're watching these things unfold during the day. Now, we also need to talk about the euro. So let me get this out of the way here, because the euro's had some really good moves here today, doing what we had hoped it would do. And, there's my gold coming down. That's what I wanted to see. Good, that's it, because I just got out of the long gold, and I'm waiting to see what's going to happen next year. Okay, now let's come over here. I'll do the euro or the Russell in just a second, but I wanted to do, this one is the one we were watching today here, because we were trying to get short the euro up in here. If you remember, we had this move right here. We were looking for it to get to that level, because that completed that ABCD pattern right there. Okay, and that's where the number was here, 115, almost 116, and the high was 116.04. It's down a little bit from that level, but it's done exactly what we wanted it to from that level. And this is this is all day's action today, okay? Went exactly to where we thought it was going to be, so that's where you want to get your short position on, and we wanted to try to do that. If you remember, we were also looking at that in the eyes of the British pound, but unfortunately I haven't looked at that this morning, but there was a big 382 staring at that one also, and we're going to see, and there it is right there. There it is right there. Went exactly to it today. Today's low. Look at that, folks. Today's low was the exact 382 from here. That was the low, and then you went right back up to the 382 again. So you're in this really neat trading range. But there was a, it didn't make very much. It had $300 or $400 in it, but they stopped exactly at the 382, just like it did right there. You'll see that from there your low up to your high, stops right there at the 382, makes a new high. There's your new 382. So it still has a bullish bias, but a lot of resistance up here at the 382 level as we're watching this unfold for today. Now, we also had a potential trade in the natural gas, and I want to bring that up to you today. We missed it because it had already happened by the time I got word that it was happening. One of our friends was kind enough to show it to us. And you can see here, we're back up here again. So you might even get another chance, because it's always gives you more than one chance. Because here's where we are over the last few days. Let's just clean this out, and you'll see where we are. Okay, now there's drive 1. Okay, there's drive 2, and there's drive 3 right up here. Okay, now let's do this together so we can see what we're doing. Okay, here's your first ABCD move right there. Okay, that takes you up to right there. So there's drive 1, there's drive 2, there's drive 3. I'm just going to draw them in with the drawing tool so that we'll do this one, so make it see it a little more clearly. Come over here to that and get this one right there. And there you go. There's your 1.27 expansion. There's where you are right now. Now you backed off just a little bit today from that level, but here's where you are right now. All right, now we'll be right back. We'll look at this again in just a second, so stay tuned.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Okay, folks, this is natural gas, but folks, be careful here. This is a huge move, folks. This is a $3,000 move up here today. It only backed off $700. Now it's making a small pattern right here. We look at this on an 8-minute, you're going to see a little gartly forming up in here. In fact, well, look at this little pullback right here. I wouldn't touch this thing from the short side, folks. Forget about it. Move on to something else. Thank you very much, and we'll click you off and move on to the next one. Okay, there's where we are here. Back here and take a look at this Dow Jones, folks, because I'm not surprised that it's doing it, but the fact that it's doing it with such power today, and I don't see which of these is the most powerful of all the ones that we're looking at. You can see the NASDAQ is really, starting to pick up steam today after being way down here. Now, this was really important. Look at this on the hourly chart, folks. If you think about these numbers, you see that little low that we had right there at 125.40. If you just move this up, you see that. There was your low right here from this level right here. Okay, now you come down and test it, but you didn't even come anywhere close to any type of a 382 retracement or anything in here. Nothing at all. All this was right here was, if you looked at this on a smaller time frame, go down to 13, you're going to see you had a really nice ABCD pattern right there. You can see, we'll just draw it in from where it is. You can see there's where it goes to right there. And that's why I said, look, you're probably going to be a buyer here, and look where we are right now. And so we came below the 786. There's your 382 earlier in the morning. That's a big move, folks. That's down 100 and about 200 NASDAQ points. And now look what we've done on the upside. It's just continuing, to move higher. And it has been following the program that we look at, the little AI program, very, very nicely. There was the sell right in here. Here was your buy right there on the low right there. That's the ABCD that we're looking at. And here's where we are right now. And it's moving a little bit higher. They don't always work that way, but sometimes they do. Now let's take a look here at the crude oil, because crude oil had a very nice pattern this morning. Early in the morning, we had this yesterday. Okay, there was our ABCD to the downside, ABCD. Then we had the rally up. We had the ABCD here last night. This is the one I put in the video. I said, look, we've made a bottom in here. There's your first ABCD pattern here. And then I said, watch this. If it backs off only to here, it's going to be really powerful. There was your first 382. There was your second 382. There was your third 382. This last one was 50%. But remember, now we're up here. We're completing all these patterns up in here. So it should be a place where we start getting some type of a correction on the downside. If we move to the hourly chart, hold on one second, and we'll get this up to take a look at it. You'll see there's where we were. You can see we had another pattern. We take out all those highs right back here. That's all we just did. And I'll just draw this. I'm going to get rid of this thing because it doesn't have all the right things in there, because they what they do is it's so sensitive that they can't always line it up the way they want it. Let's get rid of this. So here's what we've done here so far today. We just completed a major pattern. We've taken out the highs of last week, what you're supposed to do. There's your downtrend, A, B, C, D. We had higher bottoms in here all the way, looking good. And what we do, all we did today was go up and complete the pattern. Probably hit it exactly on the money. Let's just double check, bring it up a little bit below it. And let me see, we said 01, it's got to 130. So this has completed this pattern for today. So I really believe we're starting to, sell off. High was 61.30, and we were looking for it to come in around 61.10. Went a little above it. We're a little below that right now. So that's what we're watching here on the crude oil in this shorter term time frame. But the key was these smaller 382s in here today, folks. Those were the ones that were really on those strong trending markets like that. Those are the ones that you really like to see, right? There's one right there. There's one right there. There's one right there. Have another one right here, but that's an ABCD. Let me just quickly look at that one. Yeah, there's your last one right here. Your last major low was this one right here. And that's already through the 382. I can see it's probably at 50%. Yeah, it's at 50% right now. But all of these others, there was your first 382, second one, third one. There's the other one, and then this is where we are now. But now we've completed a whole bunch of patterns up in here. So this is not where you want to be looking to buy it. I think this is where the area you'd want to be looking to be a seller of the crude oil now after that move that we've had right here. Okay, excuse me, folks. Let me get up here. Got a little frog in my throat. Whoa, gee, we're making really big moves here in the S&P here, as we should be. Let's take a quick look at it right here. I would like to bring, I'm going to show you this because my good friend T. West showed me this. Now, this was the forecast for the S&P for today. Okay, now you see it was supposed to be down into this low right here. As you can see, it came very, very close. Now, the NASDAQ hit it exactly. This one missed it. You can see it's off by about half an hour, but this is NASDAQ was perfect. This one didn't. And then we started to go up. And again, looking at a real strong trending markets. Okay, there's your first 382. Here's your second one. Now remember, this is stuff that you can do at home, folks. It's not rocket science. There's your strong trending market. Strong trending markets. Look at that. These are what dynamite triangles are, folks. Let's get rid of this, and I'm going to cover this on the show on Friday when we do the live trading. I just want to show you when you got a market that's really running like hell, and this is running like hell. You make little corrections like this. All you do is you buy those new highs. There's your 382. What do? You buy the new high. You buy the new high. You buy the new high. And you did that with gold this last week. The last 3-4 days, you made a fortune. Because that's all it did was take those dynamite triangles and boom, away it went. Because when you have real strong trending markets, that's all you're going to get. These are called dynamite triangles. This was termed by Edwards and McGee and also by John Murphy in his book. That's what they are. They're little dynamite triangles, just like that, making new highs, and they're all over the place. You'll see the same thing. It repeats over and over, right, from Andrew Lowe's book, right? See how the market just backs off, just a few periods and then go, few periods and then go, few periods and go. That's what you're looking for. You see the same thing on the downtrend. I haven't seen any for lately, but they will be coming. And that's what you're watching here as you're looking at this. We got Stan Harley coming up here very, very shortly. What did I have to cover? Oh, someone asked me to cover the Tesla because we're having a lot of action. It's down just a tad, I think, today. Hold on, let me get it up here. And it starts with a T, right? TSLA, there it is right there. And we'll get it up. It probably might be up on the day now. Yes, well, here it is right here for today. This is hourly. You can see we're down today. There's where we were yesterday, just backed off a little bit. We had the ABCD pattern here. This is the 1, 3, 5, 1, 3, and 5. So we are in a downtrend on this. So we'll be watching that one as we go through. But the rest of the markets are acting very, very bullish. So we need to get ready for Mr. Stan Harley coming up in about 50 seconds, but we're going to look at Apple one more time, and then we will take a look at that. Sorry about the frog in my throat, folks, but I've got to get it taken care of. Hold on one second. Here's where we are. Apple's doing really good, folks. It made the 382 here, and it's still going higher. It hasn't backed off at all. It just looks really good. There's nothing to make it think it's not going to go anywhere but higher. You can see we got higher bottoms all the way through here, making new highs again today. Or not making a new high, but moving into the high ground. That's one of the reasons the Dow stock, and it's helping get the Dow up 520 points. I see on the old tote board up here. So it is going to be quite interesting here. So we'll see in just a few minutes with Stan Harley. So God bless.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, folks, this is the Hong Kong index. Just so we had the move down here in October. Then you had the first ABCD pattern that completed right there. That was a Gartley pattern. We're going to draw that in. Hold on. I think we might have our man in the house. Not yet, but he's going to be coming soon. Hold on. Oh, he has no chart coming in. That's right, Al. You're absolutely correct. Sorry about that, my friends. I'll get this up here now, and you'll be able to see it. I keep forgetting I got to get into the mode. Okay, here's where we are. I was drawing this ABCD pattern here from this Gartley that was right here. Okay, you had a sell Gartley right there. The next 2 days, guess what? You had a buy Gartley. There's your X ABCD pattern right here. And what you're looking at now is you're looking at the number 3 Gartley coming in right about here. So we're going to draw that in. And we're going to bring this up and take a quick look at it. And there's where we go. The real mystery today that I have to figure out is why the Dow is that much up, because I looked at the Dow stocks that I follow, and it doesn't show that it should be up 537 points, but it is. Here's a number we're watching. Let's write this down because we want to watch it for tomorrow, because we got the Hong Kong, it'll be opening tonight, and there you can see that's going to come right at roughly 27,000. We're going to call that 26,881, 26,880. That means up about 200 points. It would complete that pattern right here. That's the A, B, C, D pattern right here, and it's been following very nicely. So that's it. If we move this over a little bit, you can see here, this is not really a head and shoulders pattern, you see, because there's no symmetry here. Symmetry is you have to have the head in the middle and the shoulder over here, which is lower than the right shoulder, but the head is wrong. So it cannot be head and shoulders just because it has no symmetry. And one of the factors of that is that it has really strong symmetry, and this is not doing that. Okay, now Stan's not here yet, so let's take a look at soybeans. We've had several people ask about that. Hold on one second. One, of course, was my sister. Hold on. Where's the soybean meal? Just a second, Larry. Get her up right here. This has been pretty strong lately, so you can see it's still holding up really good. No 382 pullback as of yet, so watch that. If you get one, I think you have to take a look at it because the Chinese are in there buying, and anytime you get a good break, they're going to be watching it down about another $11. I'd certainly be watching that. We had some gaps here. There was the big 3 drive to a bottom pattern, and we had the same thing in wheat. We'll look at the wheat also since we have that coming up next right now. And it's backed off just a little bit. We'll see where we are. We still think we're going to be going higher in wheat. We're waiting for the pullback. Came really close yesterday. We were watching this. See, let's get rid of this so we can see it real quickly. There was our bottom. And we did get to a 50% retracement here yesterday, 2 days ago. Okay, right at 50%. All we've done so far is rally up to the 382 so far today. Looking at this on the hourly, you'll be able to see that context. There's your 382 that we were just talking about. It rallied up to it. What did it do? It just backed off a little bit today. So it's still acting pretty good. And I still think you want to get a nice place to buy the wheat. It's probably right down in this area somewhere because, folks, people are not going to stop eating cookies, cakes, and pasta. We already figured that out, haven't we? We looked at that on that long term, on that big daily chart. And there's where it was way back here when we got to 490 and change right there. There was the spot to do it. There was your big ABCD coming in right here, drive 1, drive 2, drive 3, and boom, away it went. So you get a chance to look to buy the wheat because inflation's coming back, folks. It hasn't gone away. All it's doing right now is taking a little breather. We're seeing it in a lot of other things besides health care and food and other things like that. But and you can tell by the bonds, interest rates are not going lower. They are going to be going higher. So you want to get ready for that as we see that. As a matter of fact, let's take a look at the Treasury notes. I haven't looked at those in a while, and someone asked if I would take care of that today, and I will. It starts with a T. There it is right there. Let's start out here with the daily chart. We should be on the, okay, here's where we are. Boy, this tells you how long I haven't looked at this chart. Let's refresh this so we get everything in it that we need. See, I follow the bonds. Okay, here's where we are here. Just move this out here. We really have see that the bonds are so perfect because there's so many more. The more people trade the notes, but that's for interest rates themselves. The traders they trade the bonds because they're a lot more volatile. These moves here, you hardly ever get $1,000 move. You get $1,000 move in the bonds if somebody in Washington shakes their head. You can see here from the high that we made right here, all we've done here the last few days, every single time we get up there, it bangs its head right against the old 382 right there. There it is. We haven't even made higher highs than we did yesterday. I mean, that's supposed to be interest rates dropping? I don't think so. It doesn't look like that way to me. And you look at this on the long-term weekly, it's, you can see here, this is long-term weekly. And remember, folks, remember this back here? This was what do you call that thing? Negative interest rates. Well, that was not such a good deal. Anyway, this is where we are right here. Oh, wait a minute. I think maybe we have Stan in the house now. Stan is in the house, my friend. How are you today? How are you today? How are you today?
I'm doing just awesome. I'm having some issues with my camera, but I think we can share some charts.
That sounds good. I have issues with computers every day. I call when I wake up and look at my computer. I said, what do you have scheduled for me today? And she always says, be patient. I've got something new. So please continue, Stan.
Okay. What I thought we would do is just talk about some cycles today and kind of give you my perspective on where things are going. But to start out with, I just want to remind folks that today is Veterans Day. And,
yes, it is.
We need to be thankful to all the men and women who have worn the uniform for this great country. And Army, Air Force, Navy, Marines, Coast Guard, all of them. I'm a former veteran myself. There is a picture of me back in the day when I was flying the F-14 Tomcat. I don't know if it's coming through my monitor, and I don't see it yet. Are you able to see my charts?
Not yet. Not yet. I've got a blank screen. I don't know why it's blank, but it says you're there, but I see you standing here. Let me do this. Let me try this. Nope, I don't get the charts. I don't know why I'm not getting the charts. I see you sitting there, but I don't see the charts popping up.
Wow.
So it's always difficult with the technical part of this business, I'll tell you.
Okay. Well, I guess we'll have to talk through them if I can't get it to work.
There's Tom Cruise. I see a number 34.
Okay.
Isn't that Tom Cruise?
Yeah, there you go. That's Tom Cruise.
Yeah, well, that looks really good.
We got the music. Okay, we'll pick it up on the back end, and I think we'll work it now.
Sounds good. Well, this is worth the price of admission anyway. Wow, Tom Cruise is in the house.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, we're back, folks, with our good friend Stan Harley of the Thunderbirds.
I was Navy, by the way, not Air Force. But yeah, I've got a new camera system and I'm running it through OBS software on my computer, and I may have some bugs yet to work out. So by the time we do this next time, I should have that all cleaned up.
Okay, please.
So let's zip through the charts because we got a short session here today. What I want to talk about are cycles and how to measure central tendency. There are a number of ways to measure central tendency of any data series. I've highlighted 4 here on the screen. One of them is using Fourier analysis. Another is involving regression modeling. A third one involves computing the average or the mean, which most folks are probably familiar with. And the last is the computation of the median. And they all give different results. So what is the best means for measuring central tendency of market cycles? I contend it's the median. Not the average, not the regression, not the Fourier analysis. It's the median. Let's look at the stock market, for example. And we're going to focus on what I call the 3 primary cycles to illustrate this point, on the monthly, the weekly, and the daily. This is a long-term chart of the S&P 500 going back to the mid-1970s. And here are the dominant lows on the chart. And by computing an average, I find that the low-to-low sequence averages 82.2 months. That's from low to low. Now, that doesn't mean every 82 months we hit a low, but that's just what the average is when I can plug all these low points into a spreadsheet and do the computation. And it works out to about 82 months. And it's forecasting a low in the next low in the sequence for May of 2029. However, the stock market, the monthly cycles are not fixed beat oscillators. They move around a bit. And so there is another way to look at the central tendency of the data series. And let's just look at exactly what it's doing. Going back about 30 years here, you can see I've marked off the cycle length in months. We had a time span of 48 months, 77 months, 31 months, and so on. As it turns out, when I dump all of these into a spreadsheet and compute the median, not the mean, but the median, I find the most common occurrence is about 49 months. Technicians in the past used to call that the 4-year cycle. We don't get lows every 4 years, but that is the most common sequence of low to lows. That is the median. Some are a little bit above, some are a little bit below. They tend to vary by the Fibonacci ratios 0.618 and 1.688, as I've shown here on the screen. But the most frequent low to low sequence on the monthly charts is 49 months. For the weekly data, it's a little bit different. Again, here I've noted all of the dominant low points on the weekly chart, and I've plugged these dates into a spreadsheet, and that's what you see here on this page. And it varies from 49 months down to 19 months. But when I compute the median of that data set, I find it's 33 weeks. That's about just under 8 months. And assuming that we get a 33-week cycle low pretty much on skid, that projects a low towards the end of this month, right around the 25th of November.
Wow.
Interestingly, when we look at the weekly data, take a look at this, Larry. As the S&P has gone higher and higher, look at the measures of price velocity, or some people call rate of change or momentum. It's all the same thing. And you can see it's drooping seriously. What does that mean? Market's running higher, but it's running out of gas. And this type of divergent structure is what we typically see at some kind of an intermediate high.
Very nice.
Now let's look at the daily chart. The numbers here are a little bit different than the monthly and the weekly. What I have found over time is the most frequent, in other words, the median primary cycle on the daily chart is about 40 trading days. Again, that doesn't mean every 40 trading days we get a low, sometimes more, sometimes less. But when we look at the universe of trading cycles and compute the median of that data set, we find it falls right at 40 trading days. And if the pattern continues, if we get 4 trading cycles of 40 trading days each, that's about 160 trading days. That too points to November 25th, 2 weeks from today, for a potential low.
Okay.
Another cycle I have found, this doesn't have anything to do with the trading cycle, but it's just a cycle that has shown up on the charts, and I've shown this in the past here on the show with you. I found that there's a 17-day trading cycle in the stock market, and its genesis point was the high back in February of last year. And what has happened is the dominant lows on the daily chart have been occurring at about every 17 plus or minus 2 to 3 trading days. And I think if the pattern continues and we get a nice little Fibonacci expansion from the last one, that too points to a potential low about 2 weeks from today. So I understand you have a bullish bias in your views. I'm going to take the other side of the coin here. I think we are in a topping zone, maybe today, maybe tomorrow. I think this thing is going to stall out. And then I think we're going to start chug-lugging southbound once again. I'm not looking for a big drop, but what I call a weekly primary cycle low the last week in November. So about 2 weeks from now, I think we should hit a nice low. And if I'm right, that should represent another back up the truck moment for long side investors. Lastly, I thought we'd take a look at Bitcoin.
We're not showing any slide on Bitcoin. Could you get the chart up, Stan? It's not showing. All we're showing is a cycles tendency chart. It's not showing any Bitcoin.
Oh my gosh, what has happened here? I see that on my monitor. It's frozen.
Yeah, well, welcome to the club, Bubba.
Oh boy, I'm so sorry. I don't know if the problem is on my end or yours. I'm guessing it's on mine. It's my computer. I am so sorry.
Don't worry about it. Don't worry about it.
I gotta get this stuff fixed if it's my end. Maybe I can work with Al again. A couple of weeks ago, he and I had worked out some of the bugs, and we'll have to do it again. Anyway, I'll just talk through this. Bitcoin has a 47-month cycle from high to high. That's about 4 years. And I was projecting a high in that series for the October 2025 time period. It looks like right now the high in Bitcoin that occurred back on the 6th of October may well have marked that 47-month cycle high. And if that's the case, we're probably going to see Bitcoin move southbound Bitcoin has a tendency to make spike highs and rounded bottoms, like many commodities, which is just the opposite of what the stock market does, which is typically makes spike bottoms and rounded tops. But Bitcoin does just the opposite, just the complexion of traders and investors in that market.
Okay.
And I'm looking for Bitcoin to generally move southbound back under 100,000. There's the music.
Hey, listen, Stan, thanks for joining us, buddy. We'll have you on again soon, okay?
Thank you, and we'll get the bugs worked out before the next time.
Hey, don't worry about it, buddy. See you later. Thanks for coming on. Stan Harley, folks.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, I wanted to show you the volatility here in the Russell that usually is non-volatile, but you can see this morning it had a $20 down, that's 1,000, $20 up, $19 down. That moved 36 points, folks. I know 66 points, folks, before it even got through half the morning. And then after it started, you can see it started to, make some really good moves here. You can see we started doing our first ABCDs. We'll just do these one at a time here because they follow everything else. It's a great one to trade because it doesn't have usually the volatility that we have. But there was your first ABCD pattern was up in here. Of course, we went higher than that, and it's been going all the way. We've had just a few little pullbacks here that have only been at the 382. Now, on a long-term basis, this is the one, if you're going to short something, let's just get this up on the 4-hour chart, because, this is the one that is way behind everybody else. See, this is we got the Dow Jones up in here. All right, we got the S&P up in here, and look where we are with the Russell. This is, if you're going to sell something, this is the one you want to be looking to sell. This is the weaker. All right, so here's where we are on a 4-hour chart. You can see the move we had today. Look, there's where our move was on Friday. And look, the rally we've had is straight up. We had a little bit, well, I didn't even see that. Holy cow. Let me double check just to make sure this is all correct. Yep, that's it. I wonder if that's a 382 here yesterday, folks. Let's just double check. Hold on one second here. There's your low right here. Oh, they're not going to let me do that. Oh, dear. Yes, they are too. There it is right there. Oh, my goodness. What do you think that was? There's your pullback yesterday, folks. And look, we almost made it again today. Perfect 382 yesterday, and we're heading higher. So we could easily, without any trouble at all, let's just look at this, very easily make an A, B, C, D here on the Russell. So if you're going to look to sell one, and it will be 25.37. The old high was 25.70. So watch that up into this area right here if we're going to get it. So live every day in an attitude of gratitude, and may God bless. And we'll see you on the flip side tomorrow, folks. Thank you very much.